Kirk Duckwell here with Mastermind the Market, your real estate stats update for the Twin Cities area. Well, if all you want for Christmas is lower interest rates, Santa may have a treat in store for you after all. We'll get into that in just 1 second. But first, I want to mention a class that we have coming up, Hack Home Buying. I will put a link below to that class if you want to register a free class. This is actually very similar to a continuing education class that we teach for real estate agents, and continuously they give us 5 out of 5 on that class. So if you want to learn the same tricks that we're teaching real estate agents, come out and check out that free class. This is not just meant for first-time home buyers, second-time home buyers, third-time home buyers, real estate investors as well. Come check out this great free class. A lot of good information that we cover in there. Again, I'm going to put a link below to that. All right, let's dive into the data and take a look at what's going on in our Twin Cities market. Okay, looking at the showings per listing per week, median sale price range. Yeah, staying pretty flat here as we come into the holiday week. 2.92, steady at 2.92 week over week. We're ahead of last year by a few percent, up by 3% currently. Total number of showings up as well by about 4%, so 1,616 in comparison to last year's 1,547. So that's up by 4%. We're seeing a cancellation rate at about 12.4%. A couple other data points here is current days on market, averaging at 36.3. So that's actually been coming down a little bit. Not a big surprise, though, since we saw that jump up in showings per week per listing a few weeks ago. Foreclosure rate is coming down as well, down to 1014 in Hennepin County. And the market meter, not a lot of movement at 3.41. We'll circle around to that in just a second. All right, new listings tracking slightly ahead of last year. We were at 782, now up to 733 week over week. Pending sales up a little bit as well, 659, down a little bit, 659 down to 633, up over last year, though, where it was at 602. And then inventory of homes, I want to focus in on this one a little bit. So it was at 8,075, down to 7,712. This is down by about 4.7% over last year. Three-month average is at 4.8%. If we hold at that rate over the next 60 days, that'll set us up to have the second lowest inventory that we've experienced. So this is going to get into the next thing that we're going to take a peek at here after we talk about the market meter real quick. All right, so looking at the market meter, up a little bit over where we ended up last month. So we were at a 3.36, now sitting at a 3.41. Expect that to rise, though. So that is kind of in that mild buyer's market range. That's going to pick up very quick. If we look at what happened last year, we were rounding out December at 4.14, and by the end of January, we were in seller's market range at 7.03. We may accelerate that fast, if not faster. And that's because, remember I talked about lower interest rates? Yeah, we saw a big drop off in the bond market when the Fed had announced that they were looking at cutting rates next year. Now, when the bond market reacts to the Fed speaking, that means that some of that interest rate cut is already baked in to today's rate. So we can see that dropping off in the bond market. When we go over to interest rates, we can see that big drop there as well at about the same time. So this could lead to some volatility if the Fed delays on making one of those cuts. We could see rates shoot back up. So that will play into ultimately how fast our market goes as we get into that early spring market, late winter market. But those rates going down did keep the mortgage application rate quite high. The 6 weeks running will be really interesting to see. We did have a week here when the most recent data came out, down by 1.5%. We'll see where things come when we get the most recent data coming in, though. It'll be interesting to see where that comes. So, all right. So what does this all mean as we kind of look forward into the post-New Year's timeline? Well, pretty much, the week of Christmas, tends to be a little bit slower, but the buyers that are out there tend to be a lot more serious. If you are a buyer and you want to take advantage of these lower rates and maybe grab a deal that might be out there, this is not a bad week to be out there looking, the week between Christmas and New Year's. For sellers, though, don't expect high levels of activity. That said, the competition is going to pick up quickly. Looking at that mortgage application rate, that is a good 30 to 60-day indicator of how strong the market is going to get. So we can expect a pretty competitive late January, February market. So for buyers, if you really want to capture that best interest rate combined with best negotiation, you want to act sooner rather than later, I would say. And for sellers, just be patient. Your time is coming here. Hopefully you found this information helpful. Again, check out that free class that we have coming up. That is going to be on January 24th at Crooked Pint. Again, Hack Home Buying. I'm going to put a link below to that. Everybody have a great holiday season.